Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a bright, early Monday morning. We are coming to you live, as always, from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Morning, guys.
Hi, good morning. Morning, Nigel. Start of a brand new week and a lot of cues to track this week. Looks like we're going to start with a bit of a back foot this morning, but we'll take it as it comes.
Looks like it. I mean, the market has been in a range, right, for the last 4 or 5 days. It's not done very much at all. So it's been, what, a 100-point range on the index for the last 4 sessions now. The lower end broadly has been about 18,200. The upper end has been about 18,300. I mean, of course, there was an overshoot as well middle of last week, but that's been the 100-point broad range. So it's not done very much. Now, we're actually starting with a lot of news flow from elections in Turkey, Thailand, but not really relevant for us. But there was relevant news flow in terms of inflation numbers out of India, which I think is significant. So inflation, headline inflation at least, is below 5% for the first time in 17 months. This is important because there was a lot of debate after, RBI's action or lack of action last time about what happens, in subsequent meetings. And if anything, this number kind of reinforces expectations that, the pause was correct and perhaps the pause will be extended as well. So this is something which we will come back to, but I think it's unambiguously positive from an equity market standpoint as well. The other thing, of course, was the Karnataka state elections where, it was a sweep by the Congress. The BJP is out. The state, of course, has not returned an incumbent back to power in the last almost 4 decades or so. So it's a rotation. But the margin of victory which we've seen, the number of seats which have gone to the Congress, I think it will sharpen the focus on politics generally. And, of course, other state elections leading up to the big elections in 2024. I don't think there's any very immediate kind of outcome, but this is something which will be at the back of the market's mind that, there can be upsets and one should be open and accepting of those as well. Now, global cues that we will react to are largely soft. The Nasdaq was down about 1/3%. The S&P 500 was down about less than 1/4% or so. You had the University of Michigan Inflation Expectation Survey, which basically showed that expectations are stubbornly high. As a consequence of that, we had yields which actually were steady. But the dollar index is something I want to highlight. The dollar index is looking, technically speaking, it's broken above its double bottom neckline at 102.4. And it could, technically, if you kind of project targets, we're looking at 103.5, 104 kind of levels. So the dollar index, based on this pattern, looks like perhaps it's at the cusp of some sort of a reversal. We'll come back to this as well. But this is not good news. You want the dollar weaker, not very strong. Now, let's come to the levels here in India. The Nifty, because, we've been in this tight 100-point range. The levels don't change very much. The support stands at 18,250. It's moved up a little bit because this is the lower end of what is a rising channel. So 18,250 is the first support. And then you've got the Friday before last's low, which was 18,055. So these are the two broad numbers that you want to keep, as supports, as areas around where you want to poke in and try and buy the dip for a trade, if you are trading. On the upside, the level is the 78.6% retracement of the entire fall. That has not changed in the last 2 weeks because the market's not gone there. 18,450 is that level if the market starts to make a bit of a move higher. Now, the Bank Nifty has broken above the high of 43,740. We were talking about this intermarket divergence where the Nifty was making a higher high, the Bank Nifty was lagging, but the Bank Nifty on Friday did break above that high. On the way up, I think there is only the all-time high, which is at 44,141. That would be the logical kind of target. And supports for the Bank Nifty would come in at the 20-day moving average, which stands at about 42,883. So that's basically the broad kind of picture which we are starting another day with. The SGX is indicating a 50-point downtick. An hour back, it was about 65 points. It's improved a little bit, and maybe it does a little bit more as we get closer to the open at 9:15. Sonia.
Absolutely. And I think this 18,300 level has been a bit of a sticky zone for the market, right? We took that out last week, but this week looks like Staying above that could be a bit tricky, at least at the start of trade. The SGX Nifty indicating that the start will be mildly in the red. A couple of things to remember. This has been a very strong market, no two ways about that. And the Nifty is now, about 3% away from those all-time highs of 18,887. So the trend is on the upside. It's just that we are facing a bit of resistance at the upper end of the trading range. The FI flows continue to come in thick and fast. There was a big buy figure that came in on Friday as well. And put together in the month of May, it's almost 13,500 crores of buying that we've seen. So the buy on dips is something that can continue. Let's see if this dip comes through as the SGX is suggesting. A lot of rate sensitives, banks, autos were in focus last week. And in that context, perhaps those dips could be bought. Talking about autos, very strong earnings from Tata Motors, and this entire pocket has been, the big mover in all of last week and the month. More important than, of course, JLR numbers have been very strong, but the debt has gone down considerably. The auto debt is now at a 15-year low for Tata Motors, and that's something that the street will take with both hands. So I'm focusing on that. Even the CV business has been really strong for Tata Motors. In fact, all rate sensitives, now that perhaps we're entering a rate cutting cycle, we could be entering it anytime soon. Autos, banks and real estate has been in focus, and in that context, very good numbers coming through from DLF as well. Bookings at a record high, collections at a record high, and the new luxury project has done exceptionally well for DLF. So these are a couple of pockets that I'll watch, the rate sensitives. A lot of results this week too. You have Bharti Airtel that comes out with results tomorrow. There's Bank of Baroda. There's ITC, Bata, Indigo, Zomato. So a lot of non-index large caps coming out with their numbers as well. So it's an action-packed week in that sense. But just purely for today, for the start, we may start off on a bit of a back foot. But, this market has used every dip as a buying opportunity. So I won't be surprised if that happens today as well.
Well, I'll tell you what, Sonia, that dip that you're seeing on the SGX 50, the bulls would have liked a bigger dip. So let's see whether or not that comes, because it gives you an entry opportunity. So the buy on dips thesis is going to be tested today. But provided that 18,100 odd level holds out, I'm not going down to the 20 DMA, which is around that 18,000 odd mark, but 18,100 will be the first support zone. Nifty Bank has been in a world of its own. That's been moving from strength to strength, less than 1% away from 52-week high. So that's going to be the driving factor. That needs to continue. And also going by the data points we got, both on the inflation coming at multi-month lows, as well as the weaker IIP data, well, now the streets could start factoring in a rather dovish RBI, because hikes could be off the table. And I was reading a couple of articles on the Bloomberg yesterday. They're also talking about possibly an outside chance of a CRR cut as soon as the June meeting. So let's see whether or not that happens. So short point is the street could start factoring in a more dovish RBI from here on. The flows, they continue to remain positive, but the net institutional numbers, well, they're a tenth of what we have seen on an average in the last 10 days. So yes, the FIs continue to buy, but I'd like to look at the FI and the DI number together. So that's a little bit disappointing, but let's see if it was a one-off and things recover from here. The FIs, they remain net short on the index, and I like that. You want to see those short positions built up, because that could be a bit of a fillip on the upside, in case they get stuck on the wrong side. So 54% of their positions on the short side, 15,000 contracts in absolute terms. And there was some writing that we saw even in Friday's trading session. The 18,200, 18,000 puts, both of them fairly active, adding close to around 60 lakh shares between them. The problem for the Nifty is it's going to face resistance at around that 18,380 to around 18,400, because we went there last week, and from there we did see some selling. So let's get straight to the levels. 18,100, 18,150 going by the options data. That's a bit of a support zone. On the upside, the bears are positioned to hold on to that mark. For the Nifty Bank, well, it could pull back close to 100%, but you'll have to say risk reward could favor you. At around that 43,300 odd, that should be a bit of a stop loss. The SGX Nifty is suggesting a bit of a downtick. Buy on dips is likely to continue. 18,100 should be a crucial support on the Nifty itself. So let's see how this one goes.
All right. Well, SGX indicating a 50-odd point lower start as we begin another trading session, another Monday. Well, before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets around the globe. Rupal Agarwal is our guest in the program. She's, of course, with Bernstein. She tells us what she's making of the global setup, implications for India. Our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At 8:30, we'll talk stocks and results with Prakash Devan, who's our guest.
All right, let's also kickstart the show with some equity views coming through. How do you approach the week? On the equities front, Sanjeev Prasad of Kotak Institutional Equities says Congress's resounding victory in Karnataka Assembly elections may not mean much for the likely outcome of 2024 elections, given continued high popularity of Prime Minister Modi and the trend of BJP outperforming in national elections versus state elections. He adds the market has recently found support from an improved macro outlook and low-quality earnings beat in Q4 results season, but has largely ignored a weak macro outlook and growing disruption risks, which may weigh on rich multiples of growth stocks.
On the rupee, B. Prasanna of ICICI Bank says that dollar strengthening on safe haven buying as worries related to debt ceiling triggered risk off. The rupee depreciated mildly with the resurgence of dollar while outperforming its peers, even as RBI is active in recouping dollar reserves. According to Prasanna, the INR is supported by FPI inflows, lower crude prices and domestic macros in the near term. He expects the rupee to trade in the 81.7 to 82.5 to a dollar range this week.
And on the bonds, B. Prasanna of ICICI Bank says that the risk-off centimeter and softer inflation data kept global bonds biddish last week before witnessing a marginal reversal later in the week. Local bonds continue to trade benign, even amidst regular weekly supply, given expectations of lower domestic inflation. He expects the markets to trade sideways, with the Indian 10-year benchmark yield ranging between 6.95 to 7.1 due to softer inflation print balancing out the higher global bond yields.
Well, over the weekend, we have got a lot of action that we have seen. So let's get straight to the stock-specific action. We're going to be tracking that for you in just a bit in our special Top 10 segment. We're looking at Tata Motors, Colgate, HPCL, Manappuram Finance, DLF and Navin Fluorine. They are stocks on the back of positive news flow. On the flip side, you have Avenue Supermarts, IGL, Max Financial and APL Apollo Tubes that could open up in the red.